All righty, folks, going back to the Diagnostic Trading Hour. And I just wanted to catch you up on where we're at right now and what's going on in the markets. First thing, though, wanted to talk about this past weekend. Had a lot of fun with the family. And let me see if I can bring that up. I'll show you what all we've been up to. But just doing a lot of stuff, and mainly rodeo. So just really getting into the rodeo. And Felicity, my daughter, I know I'd tell you all about her. She's been doing fantastic. Right there, she ran a record-breaking time for herself right there. She got a little less than 23 seconds, 22.78 seconds on the barrels, so which is extremely competitive for her age group. She took first place. She also took first place on the polls. She took first place in 5 events. And so doing just incredibly well. I'm very proud of her, working hard. And, she actually she got basically 2 different levels and classes, and she competed in 2 different rodeos this weekend. And just knocking it out, practicing hard, working hard. And it's really cool to see it pay off. She's very excited. Got a trophy, got ribbons. And that's always the fun stuff as a kid. And her little brother's getting into it. You can see him right there. That's Judah. He's just chilling out and ready to go. And so she leads him through. And there he is doing the flags. He gets to grab the flag and, grab it out of the barrel and walk back and all that stuff. Different events. But lots of fun stuff and, a lot of hard work. And, she just literally has learned what's sort of fun now. And it's interesting because now instead of her going, oh, man, I got to push it to beat this kid, now I start hearing, parents going, hey, you're going to have to push it if you're going to beat her, And so it's sort of cool she got to that point. And so now it's more about shaving off her time because, next year she'll be in a much higher age group. And, one thing I told her is, don't just, it's fun to, you're competing against other kids because you want to win the ribbons and stuff. That's awesome. But the biggest thing is competing against yourself. I was like, because sooner or later, you're going to be better than just about everybody that you're, in a certain group. Obviously, there's always somebody better out there. But I was like, what you want to do is you always want to be trying to get and become better than yourself. Okay? So I'm always pushing her, okay, so like we're recording her times. That's why I actually log all of her times on Facebook and we put those in there, and then she has all of her times, all of her records. And, she's literally cut from like 56 seconds down to 23 seconds. So, and her goal was to get down to right around 17 seconds. After that, she'll probably have to get a faster horse. So, you can only go a few seconds faster than that, like, period. But, anyway, now it's like, okay, well, I want to shave time off. And so it's making her really focus. It's making her, like, now instead of just writing to get it done and just writing to win, now she's like, okay, how can I get faster? How can I shave time off? And so when she's getting her training from her, trainers that come out with her, she has, like, a few different ladies that she works with. And, all with their different specialties and stuff like that. And so they're focusing on little bitty pieces. And, she's just trying as hard as she can just to, like, it's all about, like, 1 second, 1 second, 1 second. And because they actually measure it out in milliseconds. And so when you go out to the competitions, a lot of times literally between, like, first, second, third place will be fractions of a second. And they use a laser to time it and everything. And it's like it's not a human. Like, there's a laser there. When they cross the laser, it starts. When they cross back, it finishes. And liking that to trading, it's easy to be a big fish in a little pond, but one of the big challenges is to go out there and always be pushing to be, to improve on yourself. So that's one thing I've tried to do is not simply compare myself to this trader or to that trader or what are they doing and that's what I can do. I want to do better. But instead of trying to be better than them, I just want to be better than me. And so, what am I doing in my training to learn, to improve, to be better than I was yesterday? What else can I add on? I challenge you to do that. What are you doing to make your trading better? Maybe you're trading futures, or have you tried to, improve your system? And I don't mean like if you got something that's working, break it. Just go, what could potentially be better? And, obviously if something's working, don't even touch it in live, but you can mess with it in demo. You can sim it. You can go, hey, what if I added this kind of profile or that kind of profile to it? What if I, looked at this kind of volume? What if I looked at these kind of derivatives? What are some other things that I could do, constantly improve? And if you're not where you want to be, well, then obviously, you want to focus on everything you can and focus like, okay, what is the one thing that I definitely could improve on today? And what's the one thing I did right that I should, do again tomorrow? And if you can just constantly learn and add on those little lessons, those little seconds, they add up. And that's what makes, losing trader go to an average, winning trader to go into a great winning trader. It's those seconds, those little bitty things, one after the other, week after week after week. So with all that being said, we do have some news coming up you're going to want to be aware of that we're going to want to go through. So we're going to hop on over real quick to Forex Factory here. And we had quite a bit of stuff happen last night. And I want to go through the news plan, what's upcoming for the week. And, they're pretty sweet trades. So, one of the, there's a article up that we put up called Sleep Trading Almost That Easy. And so it's pretty fun. I'm looking at something from Christopher. He's looking at one of the articles I put up, and he's like, what are we going to do tonight? Same thing we do every night, take over the world, so pinky in the brain. And the article was just one of the ones that we put up about sleep trading and how easy it is. And it's just really taking advantage of the news plans that, I give out and walk through with you. And so if you haven't learned about those news plans, that they're very simple trades to put on. And I'm not saying they're always there. And this isn't like the news that you may have heard of where, it fires off and they're going to try to buy within milliseconds of it and see if you can get it on really fast and buy and, catch the positive news report and, all that stuff. We're not talking about like high speed news trading. Okay. We're talking about taking advantage of the news. All right. Taking advantage of the news and literally just hopping on. And sorry, I got a big pop up here on my window. Hopping onto, any currency, whatever it is, and going, what is the expected move I can, thinking to come out of this? And with that expected move, how can I best play it? And if I know how I can best play it, then I can put something on. And then here's the thing is we're collecting premium on news plays because implied volatility. Okay. Basically we're playing volatility crushes. All right. We have an expectation of movement, and that expectation of movement is built in to the spread, built into the option. And like on most earnings announcements, on the majority of earnings announcements, you'd actually make money if you shorted a strangle. Most people are just, a little afraid of doing that. I don't blame them. But I mean, if you think about it, on most earnings announcements, Apple, stuff like that, you'd actually make money shorting the strangle because the premium's so high. If you bought the strangle, you'd get hammered when that implied volatility gets sucked out. Okay? Well, we're in a sense doing a short strangle. Okay? We call it an Iron Condor because it actually has a capped risk on it. And we know when these news announcements are coming out, we don't have to wait once a quarter for the announcement to come out. They're coming out constantly, every day. And so we can go in here and literally in a very simple manner, just put on a trade before we go to sleep, okay? And wake up and be profitable on the trade. So, I mean, it's literally, it sounds like I'm just over-exaggerating it, but I mean, we're talking like 10 out of 12 have been, historically staying within that range. And then we have things like the stop triggers and, stuff like that to go in and, play them. So, but, I just, I don't put all of them out there, but let's see here if I can find. So like right here, this is what it is. One of the articles that just went out over here on Benzinga. But it says, as reported by Eurostat, the Statistical Office for the European Union, the volume of retail trade was down by 2.2% compared to 2015, from February 2015 to January 2015. And I go through all this, and I go through what the forecasts are, and I go through the suggested trade. Okay, so my suggested overnight trade that would be to find an Iron Condor on $1 entering as early as 11 o'clock with a 7 a.m. expiration. Okay, so 11 p.m. to 7 a.m.'s open up. That's why you enter at 11 at a 7 a.m. expiration. And so you got basically an 8-hour trade while you sleep. The minimum potential profit you want is $25. Okay, so pretty simple right there. Just what is the max profit and add them together and you got the minimum profit. Okay, so not massive rocket science here. And see, I'm trying to see if I can go on here and find the one that Chris put up. Maybe I'll show that one off. Let's see. I know he put up a couple Iron Condors here, and I know he put it on. He's loving them. He does them on a consistent basis each night, and because there are plays almost, like I said, almost every night, and so what we do is, well, first let me just show you like a couple of the steps here. Okay, so we go in to the scanner. And go to the spread scanner. And then we go, okay, what market are we looking at? We're looking at, say, euro dollar. Okay, so I'm on the spread scanner. Okay. And on the spread scanner, scroll on down here, and I'm going to want a Iron Condor. Okay, so what that means is I'm going to want one that's going to expire like later in the day. So let's just say we chose 3 o'clock. So we're going to get rid of all the 2 o'clocks. So let's go in here and get rid of anything that expires in less than 60 minutes. Okay, that'll wipe out just about everything. And in reality, knowing I'm going for like $25, I'm just going to get rid of anything that has more than, let's see here, the profit potential on this. We'll do that when we get back. So stay right there. We'll keep narrowing it down for you piece by piece, okay? All right, so we're going to go in here, and we got max risk, minimum profit. We're going to be adding in like a max profit as well to make it a little bit easier. But main thing, once you select this, you're really going for the spreads that are in the upper category. So like there's one that, $5 and $7. Okay. So if I bought this spread and I sold this spread, then on that, I'd basically make $12 if the market stayed flat. Okay. Obviously I want more than that. So this is only, 95 minutes till expiration. We're talking like 8 hours till expiration because it's a wider range. But by using the stats, I have a good idea of what the minimum distance I want is on the trade. And I mean, sometimes they'll get you. Sometimes they'll surprise you. But there's enough of them usually that it can balance itself out. And if it balances out, well, then that's fantastic. But if we go over here and we look, let's go look at the Aussie dollar. And I'll load that up real quick. We'll look at that in news announcement last night. That one was a big one. It moved a little more than normal, to say the least. But let's see. Let's back on up here. So we got on that. So we got that. You can sort of obviously tell where the news happened. And finally it woke it up because it was just pathetically flat last night. And when finally we got a little bit of movement today going on. Yesterday was just like, come on, like this put you to sleep day. But let's see what we were looking at for this. We were looking at the news. Usually there's about a 30 pip move on the Aussie dollar interest rate. It really just is not a consistently large news play itself. So let's go over here and let's measure not our high to low, but just our open. And then to 1 a.m. right there. Got about 50 pips. And then if we hop on the other side, obviously 50 pips there. So, you know, how could you have done on that trade? What would the trades have looked like? And let me see. Let me look at, I'm going to do a trade analysis of one trade a trader posted. Look at one that worked and one that didn't work. We'll do both, okay? And we'll see, was there anything that could have been improved upon that? Okay, so first we had a minimum profit requirement that we really were wanting. So just to make sure we're clear on what we're looking for, we put all the pieces together. We had an Aussie dollar cash rate, RBA rate statement, 12. So coming out at 12.30. And so we're looking for a entry as early as 11 with an expiration of 1 a.m. So 11 with an expiration of 1 a.m. for a minimum of a profit of $30. Okay, so this one trader's example. Send over to me. Let's look at it and see how it went. Okay, they went in and they did a they sold the 78.50 to 79.50. Okay, so let's go in here. It's pretty much right where the market was at, and we go back to they sold it right around 11 o'clock. Okay, so right at 2300. So good timing on that. Okay, and right there in the middle. So that's awesome. And so we got the 78.50 up to the 79.50. So way up here. Actually, had a little bit more room to go there. Let's see. Let's pull it on up. And a little bit higher. There we go. Okay. So they sold this contract. All right. And that'd be like going over here on the scanner and finding a lower profit contract where you can't make a whole lot on it. And, you know, like selling one of these contracts, you know, that has like a, if I can even find one. Let me see here. Let me make sure there's no filters on there. We'll do sell side, Aussie dollar. There's really not any with a low profit because now they're all zero because all the time value's gone that we were just looking at minutes ago. But basically, be looking for one that had like a low profit. So like say this one has 43, but say one had 12 or 10. Okay, so anyway, so we go and we sell that contract. He sold that contract at a price of 78.62. Okay, so let me just go over here. And first we'll draw a little line at 78.62. All right, stay there. When you come back, we'll do the other side, put it all together. All right, so I went ahead and we'll just typing everything up here in between break 40 to get it all put together, okay? And so what we have on the spread is he sold the 78.62 spread, or sorry, the 78.50 to 75.90 spread at 78.62. That gave him a 12-tick profit potential. He then went in and bought the 78.50, 75.50 spread at 78.39, which gave an 11-tick profit potential. So we have a total on this one. This one was sort of pushing it of 23 ticks. We really wanted 30 ticks on the trade. And as you can see, the way that this moved, let's see here. So 23 tick total max profit. Goal was 30 ticks or less. Okay, 30 ticks. A lot of tick slash pips because I know it confuses some Forex traders, but it's the same thing. Means minimum increment move. Okay, so a little bit low on this one, and so what would that mean? Well, I wouldn't get the trade on then. Well, one, you could leg in. So in the oscillation, I mean you're 2 hours out. And so you go on up here. I mean, the thing moved up 10 ticks. So you definitely could have easily gotten this fill, right? And then it came on back down here from where you started at. And it moved down about 10 ticks. Got about a 20-tick movement just right there. So you could have got the full fill. Now, you have a couple choices. I guess you have a few choices. One, you could just put the trade on, forget it, move on, don't worry about it. Okay, which is a nice thing to be able to do. Two, you could put in both legs, and then before that news announcement comes out, make sure you got both legs on. Okay. The third thing you could do is you could pass. say if I can't get the trade that I want, okay? So if I'm not able to get the trade I want, the premium's not there, I don't want to do the trade. So you can go for it, knowing that, hey, you're about 7 ticks off. So if it moves at 30, you're still going to lose 7. Well, that's not bad. Your choice. Now, move 50. So how big of a difference did it make? Well, if you would have got the 30 on both sides, okay, then what would have happened? You would have made basically $15 on each side on average, the average profit. So when it moves up 30 pips, you'd have made 15 pips on one side, lost 15 pips on the other. You'd be at break even. And then you would have netted a 20 pip loss on the trade. Okay? So again, a 20 pip loss on the trade if you would have got the 30 pips. If you would have passed on the trade because the 30 pips weren't there, then obviously you wouldn't have had any loss. So just, just some different ways to look at it. Or if you would have let it oscillate in, you would have got it and then would have had it as well. So it's really hard to close these out even when it's moving decently fast, simply because just the bid offer spread will usually be about 4 pips wide or so on the trade. And what we'll do is we'll usually see them pop up and then come on back down. And let's see. In this case, the Aussie tried to come back down. It actually had a pretty hard time. Let's see if it even made it back down today. No, just moved on up. It did bounce on back down to that sold level. Took it a while. So obviously after the expiration there. But anyways, this is a good example of just showing you, hey, was it a bad trade? It's just, obviously you got to take it with the understanding of, hey, this was outside of my minimum profit requirement on my plan, and so I am taking on a little more risk when I do the trade. So, let's see. This trader looks like had about a $63 loss on the trade doing 2 contracts, which pretty much lines up. They would have had about a 40, after fees, like $43 or so risk on the trade had they had done just 2 contracts. Okay, so that gives us the Aussie. Let's hop on over. Let's look at the year or the pound trade. We had a pound trade that we looked at last night too. So let's hop on over. Let's look at the pound dollar. Okay. And all right, got that. Now let's see, we got in on this trade. Let's look at our trading plan for the pound dollar last night. Okay. Let's see, pound construction PMI. That really was our main trade. And on the pound construction PMI, let me switch over to that. It's not popping that one up. There we go. So we'd find Iron Condor for an 11 p.m. expiration with the 7 a.m. 11 p.m. entry for a 7 a.m. expiration for a profit of $30 on the trade. So we'll go over here, 11 p.m. and we're going to take that to 7 a.m. I'm going to go backwards. All right, a little bit further back. And the announcement's coming out at 4:30. You can see that announcement. Shrink it a little bit more. Okay, this is a really big trade while you sleep one here. So we're going in, and the contracts pulled were a buy of 48.20 to 51.20. Okay, that's a buy 48.20 to 51.20, and then a sell of 51.20 to 54.20. I mean, it's just going to be off the map here. Okay. There we go. That at least let us chart it. So right back here at 11 o'clock. Okay, we're going to sell the 51.20 to 54.20. It expires at 7 a.m. Okay. And then I got to try to get that to the right price, 54.20. Okay. And then grab it a little bit further. Let's see here. We almost had that one box there. There we go. So a pretty large box there. And then we're going to, so we're selling that one. Selling that box. And then we're going to basically do an identical box, but below it. So put that down here, make it a little easier than drawing it again. And right there. Okay. And so we're going to buy this box right here. Let's go in here, buy right there. Okay. And then we're going to sell the one we sold. We're going to sell that 51.20 to 54.20 at 51.42. Right here. Okay, and then we're going to buy the 48.20 to 51.20. We're going to buy that one at 50.97. So right there. Okay, let's just change that to, there we go. All right, so pretty wide. And, I mean, if you look at that, that's actually not a bad price. I mean, it's looking at our expected ranges over that period of time. You can see most hours it stays actually inside those expected ranges. Even when the news announcement happens, it's about the only time it actually even busts outside of it and comes right back in. So, very, very nice layout. And so this is just looking at the spreads themselves. And we'll have to zoom in a little bit here on this in a minute. But let's see, we got a, okay, so we sold the spread. Let's see, what do we got? 1.5120 to 1.5420. Okay, and the ceiling of that was, the floor of that was 1.5120. So floor of sold spread. Fix that typo. Okay. And then the price we sold at was 1.5142. Come on. 1.5142. Okay. Okay, so that gives us a profit potential on this one, which is pretty nice, of actually 22 pip / tick dollars profit potential per contract. So I like that, right? So there we go. Very, very, very simple, very easy. Okay. And does that take care of that one for us? And then we go over here and we'll put in the one we bought. And so we went in and we, again, we bought the 1.4820. Notice we bought the lower spread, 1.5120. And we bought it. Let's see here. So the ceiling of bought spread. So 1.5120. The way I measure that max profit is I buy it, the most I can make is up to the ceiling. So 1.5120. And then on that 1.5120 spread, we bought it at 1.5197. So that gives us a range of 23 pips of profit on this trade. Okay. So 23 pip /tick profit. Try to make it the same formatting here. Hopefully, lining this out step by step for you will help you understand this more. That maybe adding that one more second, right, to your time there. Potential per contract. Okay. All right. Now, without the stats, these numbers mean nothing to you. Okay. It's the stats, understanding the average move, not just the average move, but the average move on that reaction to that news announcement, and then combining it with the average move of that time of day, and looking over the last 12 months news announcements. There's a lot. I mean, there's a lot. And I also look at the last 5 years news announcements. So I have a 12, I have a 2, and I have a 5-year stat analysis report that I pull to put it all together. So on this one, we ended up with a 45 tick. Okay, so 45 tick / pip. Profit potential. Per, position, I guess, would really be the with a 30 minimum profit potential goal for the plan. Okay. So this one, as we can see, did line up with our plan. We said we wanted at least 30 pips on the trade. Okay. And so it met, let me put a little enter sign in there. It met our minimum profit potential goals. And the trade worked out better. Super widespread, of course, too. So yeah, I'll get you a couple. This is being zoomed way out on the trade. It's almost hard not to zoom way out on the trade, just because it's just such a wide spread. Let's see here, and then I'll take that picture for you. All right, so we got that one, and then let's sort of get rid of the zoom, see how much that helps. Not a whole lot. Maybe if we move our, we'll get this zoom. That might work a little better. Let's move the text down. I'm trying to get to where you can see it better. Maybe if I move all this text up, you can see it a little bit better. See the price action. Because you can't really see the price action with that zoom set as it is. All right, that's a little better. All right. We'll wrap this piece up when we get back. Compare them back to back. Stay right there. All right. So on this one, basically it expired at 51.32. Okay, that was like the expiration value that came in. 51.32.8. And so made $9 profit on the upper one and made full profit on the lower contract. Okay. So expiration 51328, and again, that basically ended up with a 9.3 or so profit there. If you went in and said, okay, well, what happens if I sold it at 1.5? Let's see, we go 1.5142 minus. Let's see, what was it? If we just did the, we'll just do the simple number here. Hold on, we sold at 1.5142. If we go, okay, what was the closing time of the 6:59 bar? 1.5132. Okay, so let's make it really simple. We'll say 10 pips. So minus 1.51, 32. And there we go. Trying to get to make it work for me. Minus 1.5132. Hey, this year you get 10 pips. There's a little bit less than 10 pips because of fractional pips in there. So like 1.51328. So 1.5142 if we want to get real specific. Minus 1.51328. Okay, so basically made 9 pips profit. Okay, on that side. And then since it expired above the strike, we made full profit on the bot side. And that's an Iron Condor. Okay, so we bought it. Remember, we bought this one down here at 50.97. It expired above the ceiling of 51.20. Remember, it's right up here at 51.328. Okay, so we get maximum profit on it. We get all 23 pips. And then we sold this one at 51.42, and it expired down there at 51.32, and a fraction of a tick there. So basically, we made 9-10 pips on that because it expired a little bit lower than where we sold. So we sold, right here. We bought right there. So, and it expired right there. Okay? So, that literally is the entire trade for you. And you just put it on and let PayDry using stats to go, hey, you know what, there's this premium built in here, and I can either be the payer of it or I can be the collector of it. And different scenarios call for, doing different things on this trade specifically. So if you know what those stats are and you know when those announcements are coming out, it's like they're a surprise, right? It isn't some big, like, oh, look at this. Their stats, their stats are pretty normal. They're there every week. And you can use that to your advantage and add one more trade to your bag every night. You start off small and build it up over time. You don't have to fly through it. And again, you can manage your risk by using things like stop plugins and stuff like that. So that way, what I usually look for is at least 150% loss on the trade of my maximum profit. Usually use 150 as I've seen it hit it'll pop up and then come right back in. And very rarely have I ever seen it actually pop up and hit that maximum number. And a lot of times that means I don't even need to use, depending upon the width of the spread, I don't even need to use a stop. But there's a good chunk of them that you do need to use a stop on. So pound dollars among the wider spreads, and because it has more volatility, but also better pricing. So pick them wisely. Don't just take them because they're there. And if you haven't checked them out, check them out. And no matter what, learn about this so you can use this in your own pound dollar trading, even if you're not using spreads. Y'all have a great day.